Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Micron stock, why I'm still buying more and you should too. This article was written by Kumquat Research. Summary. Pause. Micron Technology Inc. has continued to surge, closing in on $400 per share. The current upcycle appears to have more legs, as new fabs are still a long way off. While I expect more upside ahead for MU stock, cyclicality is alive and well. Micron Technology Inc. MU stock has continued to surge in recent weeks as the memory shortage picks up steam and as investors pile in to get ahead of what is poised to be another few quarters of elevated revenue, margins, and earnings. Looking back at MU's history indicates that this rally has more to run. In my last piece on MU in December, I discussed Micron's most recent earnings report and projected a blowout 2026 for the company that would send its stock marching ever higher. I rated MU a buy, and it has since appreciated by 40% in just a single month. That article can be read here. Amidst MU's meteoric rise, I've seen a lot of conversations regarding two main topics of debate. The current upcycle is reaching a fever pitch and will soon come to end versus the current upcycle has more room to run. Micron is no longer cyclical versus a downtrend will hit at some point, as it always does. I figured this would be an interesting article topic, so I'm going to revisit some of the ideas and projections I originally made in my article back in September 2024 that predicted the current supercycle. MU has risen 345% since. That piece can be read here. But first, some background. Is the end in sight? It seems like the most intense arguments swirling around Micron relate to the lifespan of the current memory upcycle and whether we are approaching peak profitability. It's a fair question. In each of the past upcycles, it hasn't been easy to spot the top. And with MU now spiking, it's reasonable to ask whether we are close to such a scenario. To truly understand the memory market at any given point in time, there's really only two variables you need to track. Generally speaking, supply and demand. Down cycles happen when supply outstrips demand, and upcycles happen when demand outstrips supply. So let's rewind to 2023, when memory was in a deep down cycle. Micron has come a long way. Less than 3 years ago, it lost nearly $7 billion in a 12-month period, while gross margins crashed into the negatives. Weak demand from OEMs led to a price implosion as memory makers started selling DRAM and NAND below cost just to move inventory. As prices fell, Micron and its oligopolistic buddies SK Hynix HSXC.F and Samsung SSNLF significantly cut down capacity, leaving fabs empty until the supply glut could be cleared. Far from being an existential threat, this was business as usual for Micron. The booms are more profitable than the busts, so protocol is just to weather the storm and then print money on the other side. Memory demand finally bottomed and started to rebound in late 2023, and prices started to tick back up. After a few more quarters, prices started to really bounce back because most of the manufacturing plants operated by the Big Three remained shut down or working at minimal capacity. This is by design. Aggressively ramping capacity back up right after a down cycle risks oversupplying the market again. Instead, they take a conservative approach to capital expenditures and allow the market to rebalance, which keeps supply from outstripping demand and boosts margins, recapturing the lost profits from the down cycle. Eventually, as prices continue to rise and demand shows resilience, the Big Three begin to expand capacity. This is a multi-year process that happens gradually and cautiously, and is also where Micron found itself in August 2025. Demand for cutting-edge DRAM, DDR5, and HBM was strong, and was keeping prices high while NAND was just coming out of a mini downturn caused by low consumer demand. Everything was in place for a supercycle of elevated DRAM and NAND prices simultaneously, with HBM providing an additional, unprecedented boost that would raise the company's profitability ceiling. Then, the Rampocalypse began. The major AI players, starting with OpenAI, all at once began committing to massive partnerships with data center operators, GPU manufacturers, and hyperscalers, amounting to hundreds of billions of dollars. All of these investments require huge quantities of memory. This set off an arms race that quickly rippled throughout the entire memory ecosystem. Both DRAM and NAND prices are rocketing higher, with capacity sold out through 2026, and in the case of leading-edge nodes, through 2027. Even DDR3 and DDR4 prices are exploding. If you're wondering why the history lesson was relevant, this enormous investment in memory-dependent infrastructure struck at a time when Micron's capacity was still coming out of a deep rut, and the company's existing plan was to scale up operations slowly and methodically, in what management likely expected to be a typical upcycle. The timelines on fab renovations and new fab construction were made with this assumption in mind. In a sentence, memory demand is reaching what is potentially an all-time high at a time when memory supply and capacity is coming off a multi-year low. If the memory price spikes didn't make sense to you before, I hope this illustrates the situation. So now, Micron faces an important decision: scale up aggressively or play it slow. If history is any indication, Micron, SK Hynix, and Samsung will take their time scaling up so as not to create another oversupply scenario, raking in obscene profits in the meantime, while customers battle each other for memory as it rolls off the production lines. Answering the question posed by the header for this section, is the end in sight? I think it's fairly apparent that we are not even close to the profitability peak of this upcycle. Capacity was already so low after the most recent down cycle that even if the big three wanted to rapidly accelerate production, they simply can't do it fast enough. Micron and SK Hynix have both announced plans to rush capacity expansion in response to the memory shortage, but even those timelines are a year away from even beginning production. Micron has a fab in Boise, Idaho that won't be done until FY 2027 at the earliest, and a Singapore expansion that will finish soon and help with HBM, but not enough to significantly offset demand. Meanwhile, SK Hynix has committed to moving up the opening of a new fab in Yongin, South Korea to 3 months earlier than originally planned, to February 2027, which is still more than a year away. Demand is simply too strong, and the timeline for bringing on new supply is simply too long for the upcycle peak to be approaching anytime soon. The only thing that could derail this frenzy is a demand shock of epic proportions. Read on. Cyclical no more. On the discussion of cyclicality, in an article in September 2024, I included a chart showing how MU tends to drop right before the upcycle peaks and tends to rise right before the downcycle troughs. Here's an updated chart showing the trend. I had to cut off the recent run-up because it was throwing off the axes. But you can see a clear correlation between TTM revenue reaching a local maximum or minimum and the stock inflecting. This would seem to imply that MU shareholders should be continuously assessing whether we are approaching a trough, or in this case, a peak, in order to inform investing decisions. In the previous section of this article, I argued that a peak is not yet approaching, but what if that's the wrong question? Perhaps that's adhering to an outdated view of the memory market, and there's a bigger paradigm shift underway. Which brings us to our other major topic of debate: is memory cyclicality dead? Memory has been a commodity that fluctuates with its end markets for decades, but I've seen some argue that AI has fundamentally shifted this expectation, and that there is now a built-in floor of outsized demand for leading-edge, high-margin DRAM and NAND as data centers pop up like weeds. Every upcycle, I see some folks claim that this time is different, only to have it all eventually implode at some point as some demand shock throws the market into chaos. But will this time actually be different? It's an interesting question and necessarily entails an underlying assumption that substantial demand shocks are a thing of the past. After all, the only way for memory to escape cyclicality would be if supply never outstrips demand, and barring any sort of natural disaster or war or something else equally as destructive and unlikely, it's hard to imagine a supply shock being the cause of a market imbalance. Therefore, the only way for memory cyclicality to truly be dead is if demand for AI infrastructure never stops going up. Anyone who has read my other articles on companies in the AI sector knows that I am not really a true believer when it comes to the demand story. When it comes to the AI data center pipeline, the only ones who have seen a lick of profit are processor designers like NVIDIA, NVDA, and Broadcom, AVGO, and anyone upstream or adjacent to them, e.g. TSMC, TSM, Micron, Celestica, CLS, etc., but no one buying these AI accelerators has even sniffed a dime. OpenAI is projected to burn $14 billion in 2026, and the hyperscalers actually hosting and running these models are investing tens of billions of dollars in the hopes that consumers and enterprises will line up with wallets out for access to the latest LLMs available. So far, that hasn't occurred. The economics of the market are uncertain at best, and in my opinion, don't work, considering how expensive it is to train and run inference on models, and yet how easily copied they are, as DeepSeek demonstrated quite deftly. So everyone is racing to build out data centers to accommodate demand that might not materialize, which has sent memory demand into the stratosphere and has left memory makers like Micron to catch up. I'm not saying a demand shock is coming anytime soon, but to argue that cyclicality is dead because AI demand will generate a never-ending spigot of capex is short-sighted in my opinion. So no, I do not think cyclicality in memory is dead, though I do think the current upcycle will be an outlier for many of the reasons I stated in this article. How investors play it will come down to how one views the longevity of said upcycle. Investor takeaway: considering the big three are still a long ways away from bringing new capacity online to deal with the current demand surge, I continue to see MU as an attractive short-term investment as revenue, margins, and EPS reach record levels. DRAM and NAND capacity are sold out through 2026, with leading-edge nodes in even shorter supply, which should provide upward momentum to the stock going forward. In the medium term, I think investors will need to keep a watchful eye on both demand and supply indicators. As we near late 2026 and early 2027, we might see increased volatility as the market weighs the possibility that increasing supply could hurt margins and pricing power, and who knows what the demand outlook will be at that point in time. We'll know more as we approach. But this is where holding MU will start getting dicey. Long term, I think a demand shock is inevitable. AI infrastructure can't keep expanding forever. The downside of an upcycle this pronounced is that it has the potential to cause a pronounced downcycle as well. Micron will weather the storm as it always has, but it could be a couple years of bearish sentiment. When this will happen is anyone's best guess, but I don't think AI has killed cyclicality, and anyone investing as if it has is playing an extremely dangerous and potentially unprofitable game. For now, on the catalysts I mentioned, I am reiterating a buy on MU. This article...
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.